Setting up YouTube. Okay,
Wow, dude.
and perfect. It's the big screen on YouTube.
We good to go?
Yeah, you can
Jim,
start
you did a
because we
really
have
good job
about
in these fairs.
40 seconds.
William was all right. Okay, good evening, everyone. I'm gonna call the meeting to order. I'll look for a mover and a seconder. Open the meeting.
Moved by Councillor Featherstone, seconded by Councillor Clark, that this meeting be opened at 7:14 PM.
All in favor? That is carried. So just for anybody watching, we opened the meeting at 7:14. Legally, we have 15 minutes to delay the start of a meeting. The mayor was in a previous meeting and just running a little bit behind, so she is on her way. So I'm just going to open the meeting. We'll go through some of the formalities at the top, and then hopefully that'll give her the time to get here. So are there any disclosures of pecuniary interest or general nature thereof?
Sorry, adoption of the agenda, please.
Did I not do that? Sorry. I'll look for a mover and a seconder for the adoption of the agenda.
Seconded by Councillor McInnes, moved by Councillor McInnes, seconded by Councillor Clark, that the agenda presented to council and dated the 26th day of May, 2026 be adopted as presented.
All in favor? That is carried. Now, are there any disclosures of pecuniary interest or general nature thereof? Seeing none, we have the adoption of the previous minutes. I'll look for a mover and a seconder, please.
Moved by Councillor Featherstone, seconded by Councillor Clark, that the minutes of the regular council meeting of May 12, 2026 be adopted as circulated.
Questions or comments? All in favor? That's carried. We do have a presentation that I was hoping the mayor would be here. Walk to the podium very slowly. No, that's too fast.
Do you want to?
Can we not do something else? Switch the,
Yeah.
There are no
As
staff
long as the
reports.
presentation.
So there are no questions, question period, no staff reports, and adoption of committee minutes. There are none for this session. Still rail committee, we should probably have, if the mayor's coming, I'd like to wait as much as possible for
Let's
any
go through-
substance.
let's go through correspondence.
Yeah, let's go through correspondence. Then she can add in later if there's anything.
Oh,
that-
wait.
Yeah.
Is
So-
on there?
I don't see you listed in question period, so have you put yourself on the agenda? Yeah,
Well, I tried last Thursday, but I guess I was a little late.
okay, so you're just gonna put yourself forward for the next council meeting? That would be great.
Well,
I'm sure if they know it
really
now.
Didn't want to wait that long, but I can
Yeah,
have 5 minutes of your time.
well, I mean, procedurally, it's best, are you able to come back to the next council meeting?
Oh, I can come to all the council.
Yeah, well, that would be wonderful,
But
for sure.
things
We'd love
are
to have
not,
you.
Things are not progressing, they should be progressing.
Um,
These matters.
Okay, we look forward to the presentation for sure. If you want to put yourself on the agenda, clerk or CAO, have you made note that you'd like to make a presentation? Wonderful, we look forward to that for sure.
So Thursdays, to be put in the meeting, you gotta be in by Thursday.
Yeah, yep, but you're in now, so.
Yeah, I was in last Thursday to be put in for this week, for this meeting.
Yes, so
Yeah.
to be on the agenda, you need to have a written letter about what you want to speak to on Mr. Boyd and I spoke. So he did come in afternoon, but it's Thursday at noon is the cutoff, and you have to submit something in writing to say what you're speaking about.
Okay. So, Mr. Poisey, you'll just take care of that. We look forward to your presentation next council meeting.
Sure.
Okay, great, thank you. So looking in the correspondence, we have A through I in correspondence. Is there anything that council is looking to bring forward of special
Yes.
notes?
I
Councilor
emailed Andre on D, and I with Stratford challenging Stratford is challenging the strong mayor powers, so I'd like that brought forward.
Okay. Excellent. Anybody else? Council Clark, Council Featherstone?
Just reviewing them again, but a lot of these were just for information.
Okay, so we will, correspondence, which is number 11. We'll look for a mover and a seconder to receive the correspondence circulated.
Moved by Counselor Featherstone, seconded by Counselor McInnes, that council receives the correspondence circulated with the agenda of May 26, 2026, and further that council supports the following items, D and I, and further that a copy of this resolution be forwarded to the appropriate ministries, the originator of the proposal, and MPP Vic Fideli and/or MP Pauline Rochford.
All in favor? That is carried. So we have exhausted the rest of our agenda without going in camera. So I will ask Baker Tilly to come forward with the financial report, please, and thank you for your patience. Come on forth.
I'm trying to move slow.
Oh, yeah. Fair enough. I appreciate that. Yeah. Now's the time for technical difficulty if you're going to have one, honestly. Yeah.
Okay, perfect. I was gonna ask if you could share this presentation. So we're gonna do things a little bit different tonight. I'm gonna go through my this comparative analysis, which is really the Cole's notes on my financial statements. I put it in a more plain language. I'm a visual person, so some people like to listen, some people like to read. I like to read, so that's why you get the best of both worlds. After I go through this, there is the Castle Home loan guarantee that is reflected in your financial statements, but I want to talk about it separately. CEO and I are going to kind of tag team on what that means for council and what the disclosure means. So while it is included in this presentation, I'll take you to the financial statements. We'll discuss that piece separately. Can we go to just the disclaimer? Did I put the disclaimer page? I put draft on here as well. Okay. So just there, I know sometimes this document does get made public, so it doesn't contain all the disclosures required with financial statements. So it's just users should go to the financial statements for a complete set if anyone is looking at them. So your independent auditor's report on the next page. So we've audited the financial statements of the Corporation of the Township of Bonnfield.
Yeah.
It includes a statement of financial position, statements of our operations and accumulated surplus, change cash flows and changing net debt, along with all the notes to the financial statements in accordance with Canadian public sector accounting standards. So we're saying the financial statements present fairly in accordance with accounting standards. Our report will be dated today, May 26th, assuming that council approves the financial. A statement of financial position. This is a snapshot in time at December 31st, 2025. So your cash did go up to 2.6 million this year.
Nikki.
So it was an increase of 553,000.
Bottom right should give you a zoom option. Or, okay, never mind. Sorry.
We don't want you to look too closely.
Yeah, no. There we go. That's fantastic. Thank you.
So how did you see your cash position increased by $553,000? So you generated 1.3 million from operations, and you spent 740,000 on capital additions. Now, when accountants talk about capital, what we mean by capital is it could be a road addition, it could be a piece of equipment, a vehicle, anything that's going to last more than one accounting period. So that's what we accountants refer to as capital. So we have investments. So there's an increase of 25,000. That was interest. That was the interest earned during the year. Now your taxes receivable are sitting at 435,000, which was an increase of 16,000, which is in line with the increase in your taxation this year. Why would this number concern me? Think of that when your money is sitting in taxes receivable, you're not able to use it. You have to, if you have capital projects or you have, you know, your day-to-day operations, you then have to find other means of financing that. So you want to keep that number lower. I actually have a bar graph to show what that means in your context. Accounts receivable, you had 110,000. It's really a timing of when the funds come in. Do people pay in December? Do they pay in January? So you have total financial assets of $4 million. That's items that can easily be converted into liquid cash. If we look at the liabilities, this is the money that the township owes to others. So you have 429,000 in accounts payable and accrued liabilities. So that's an increase of approximately 123,000. What this is just purely due to timing of payments. So there's nothing unusual in there. It's just, again, do the bills get paid in December or January? So there's nothing really unusual to note in there. Your deferred revenues other, this includes your OSIF and your NORDS. So at the end of the year, you have 296,000. This is mainly unused OSIF funds. So all the NORDS has been spent. So all the NORDS was spent was utilized in 2025. And you have some OSIP funds remaining that you could use in future years. In the deferred revenues obligatory, just one of those like accounting things that we separate the two based on the classification. That's you have 683,000 in your Canada Community Building Fund. So that's an accumulation of everything you have. So you have 683,000 that can be carried forward to future years. So you didn't use this year's allocation, it was set aside. Your municipal debt, I mentioned Castle Home. Castle Home is included in this number, your portion of the Castle Home debt. So you have 4.4 million of debt. What happened this year? We added 158,000 for the trunk bridge loan, and you paid down debt of 121,000. There was, we call it accretion. So when Castle Home actually starts to charge your capital levy, the accounting goal is that we get the debt on your balance sheet up to the value of the levy. So every year, the time value, as time passes, that number is going to increase until we get to your portion of the capital levy. And I'll talk about that. We'll take that offside and we'll talk about that one specifically alone. Your asset retirement obligations. This is your landfill, septic tanks, monitoring wells, if there was any asbestos or contaminants in your buildings. It has an accounting value. So if you were to have to clean it up right now, the accounting value is estimated that it will cost you $1 million. So the increase is just your annual accretion, the time value of money. So let's look at your non-financial assets. So these are assets that are used in the provision of services to your ratepayers. So your capital assets are at 10.8 million. So that increased by 137,000. So what that means from an accounting perspective is that you added more than you used. So you added 736,000. Some of the major additions included resurfacing Pine Lake Road and development roads. There was the Trunk Road Bridge, and that was offset by 599,000 in amortization. Just to explain amortization, so we buy something. Say you worked on your bridge, and the bridge is going to last 40 years. You know, we're going to be able to use that bridge for 40 years. So I take 1/40th every year and put it in an expense. And every asset, we look at how long it's expected, how long you will use it in the provision of services to ratepayers. Your prepaid expenses, that's just insurance, maybe conferences that you pay in advance, and your inventories of supplies, sand, gravel, fuel, culvert that you had on hand that hadn't been used at December 31st. So we'll come back and talk about the municipal debt separately. Stop me if you have any questions. You can be interactive if you want. Or Nikki, if you have anything you'd like to add, absolutely. So now we're going to go to the statement of operations. So let's start very high level. You have an accounting surplus of 317,000. You had an accounting budget of 309,000. So from an accounting perspective, $12,000 under budget. So now we're gonna zoom in. So in terms of revenues, you budgeted to collect 4 million in tax revenue. You actually collected 4,067,000. The increase, your taxes were $38,000 over budget. It was the supplementaries. So what you had budgeted to tax, you taxed. The supplementaries, which are unknown, they come in throughout the year. Never sure, like they're sporadic. You collected an additional 38,000 in taxes. Under your user charges, budgeted. So what I'm doing is I'm comparing your actual 2025 2025 figures to your budget figures, to what council approved as a budget. $38,000 came in over budget on that one. The environmental services was over budget by 35,000. The activity at Air Waste, the landfill is variable year to year depending on what is being disposed. Government grants and transfers, those are reasonable compared to budget, and your other budgeted 254,000 actually came in at 358, which is 104,000. So the various reasons for this was you had penalties and interest on taxes were $15,000 higher than anticipated. Your interest that you earned on your investments, $22,000 higher. You received proceeds from insurance for the year before. It was the storm event from the year before. So from an accounting perspective, we show the proceeds different from the expense. So you had proceeds, and also building permits came in at $13,000 higher than expected this year. So when we look at it as a whole, your total revenues came in at 190,000 more than you budgeted. Now we're going to look at expenses. So in this, we look at the different segments, your general government protection, transportation, etc. We look at them all. You were $61,000 under budget. We look at some of the highlights. In the general government, you came in at 54,000 under budget. You spent less than anticipated on your asset management program, less on legal fees and consulting fees than you had originally expected. In the protection services, you were under budget by 162,000. So the OPP was 33,000 less, and you had underspent approximately 62,000 due to vacant positions through the year. And having those vacant positions, you also spent less on maintenance and repairs. It was kind of that ripple effect. Now, I think it's important to note the OPP, you struck the budget before they came back with their revisions. Now, in the transportation side, you were over budget by 122,000. So there was the major weather event, the rainstorm, that was obviously unexpected, and so there was cost in this segment. You had a little bit of insurance proceeds to offset some of those costs. In the environmental services, over budget by 62,000. Now, one of it was the accretion expense. That's our accounting number for your asset retirement obligations, but also there's a $41,000 increase in the landfill. So the salaries in the landfill are not budgeted, they're budgeted through other departments, and they're allocated based on how many hours staff are required at the landfill. So that's also consistent. I look in audit too, we look for a lot of patterns. If your environmental services, you collected more revenue at the landfill, there must have been more activity, therefore you need staff. So we kind of look for those patterns when we're auditing as well. In the health services, under budget by 41,000, there was some vacant positions that weren't filled all year at the medical center. Social and family services, over budget by 38,000. So this was the cap. You had a capital levy from Castleholm for the interest on the current construction. That was 30,000 that was unexpected, so that's over budget in that line. Recreation and cultural, materials and supplies came in less. Same for planning and development. You didn't have all the consultant expenses that you had anticipated. In the now we'll look at other. So we kind of separate the stuff related to capital. You had budgeted 416,000. You actually only used revenue of 261. So you didn't need to use all the OSIF proceeds. So you have that OSIF is set aside for a future year, and you fully utilize your NORDs. So that's how we get to the accounting surplus of 317. On the next slide, just another way of showing your expenses. So when you break it all down, salaries and benefits came in at, how did I save 61,000 effectively in expenses? Salaries and benefits were 91,000 under budget. The interest on long-term debt came in at $56,000 more. You added a loan during the year, and also it includes the Castleholm. That does not include the Castleholm. We just, there was the interest expense was higher than anticipated this year. Contracted services, your OPP fees were less than expected, your legal fees, and then external transfers, that's where we included the Castleholm levy. So now I'm going to go to your reserves. So this is the reserves. Some of the reserves were planned. So council did in your budget, you did plan to contribute 200,000 to reserves. Now there was See that? There was a surplus this year, and the surplus per council resolution was to put it to the working capital reserve. So your working capital reserve is actually the one called the, Nikki, did I send this to you before I fixed it?
When I looked at this today, I wasn't sure.
Yeah, so after we talked,
Yes.
sorry, my apologies. So, your asset management plan strategic priorities reserve is actually at 516,137. So you had made a planned reserve transfer, and your tax rate stabilization, I made a mistake. I put it to the, I interpreted it.
Yeah.
You know, so I made that adjustment on your final drafts. Your your tax rate stabilization, which is kind of your working fund, you have 1,236,000 set aside. Total reserves are at 2.8 million.
So total is correct, it's just in
Yeah.
each account at that.
The allocation. Now, I'm gonna show you, if we could do a budget reconciliation, because you're probably asking me, you're like, Jess, we budgeted for 0. Why are you telling me I had an accounting I budgeted an accounting surplus of 329? We go to the next page. So what we do here is we take your municipal budget and then we adjust it for public sector accounting standards. So we take away the debt, add back your amortization, that type of thing. So really where your difference is that you didn't take out as much debt, you didn't issue as much debt, and you didn't need to repay as much as you expected. So you have some savings in there. And some of these items, I said they're non-accounting items. The expense that we did for the Castle Home debt, it doesn't get included in there. So really it's really driving from your savings and less debt repaid than you had anticipated, because you took out the loan late in 2025, so you didn't have that full year. And issuing less debt, it's actually a funny thing in accounting world, it reverses your surplus. So you're actually putting that into surplus, because you had expected to take it out, you didn't need to, we're putting it back in. So that's how we get the real number is 170,000. Why do I tell you that? So you budgeted to put 200,000 in reserve, you actually put 170 in reserve. So if we flush it all out, that real surplus, that additional amount was 170,000 on a $5.5 million expense budget. So I think that's very reasonable. I don't think that's excessive by any means. I know it sounds like sometimes we talk about this, it's a lot of money. If there's any taxpayers here or ratepayers listening, it seems like a lot of money, but when you divide 170,000 by 5.5 million, it is it's a couple dollars if we were looking at a personal budget. Now, I want to switch gears here. What does all this mean? We talked a lot about numbers. Let me put in the pictures. Your tax arrears ratio. What I do here, take your total tax AR divided by the total taxes that you levied. So it's fairly stable, around 9% year over year. Anything less than 10% is good. So you're still low risk. What I've done here, because I think everyone likes to compare themselves, I've taken similar for municipalities surrounding you, Calvin, Bonfield. I took Bonfield, and this is 2024, and this is Bonfield's 6-year historical average. So you can see your low risk and kind of on the higher end compared to some of the others. Now, if we look at total reserves, this is your total reserves divided by expenses. So for every dollar of expense that you had in 2025, you had 50 cents put away. So your expenses increased, your reserve increased proportionately, so it stayed stable. Anything higher than 20% is good. 50% might look like a lot on the surface. The CEO and I are going to talk a little bit about your asset management plan and the Castle Home capital levy and why this number isn't as high as it seems. Sometimes it's important to put context into the numbers and not just look at the numbers on the surface. So your debt servicing ratio is actually slightly misleading because the way this calculation is, it's calculated by the payment that you make on debt, so the capital and interest, divided by total revenues. Your revenues went up this year because you did a lot. You used some of your OSEF grant, sorry, your NORS grant, not your user NORS grant, that came into revenue. So we're calculating your total debt payments divided by total revenue. So it lowered the percentage this year, even though you have more debt. You're still low risk. Anything less than 5% debt servicing ratio is good. Asset consumption ratio. The next slide. This is like accounting here. I'm taking the total cost, the accounting value of your assets, divided by what we've calculated to be the accumulated amortization, that accumulated percentage. If I said every year I might take 1/4 of your bridge or 1/10 of your truck, or you add those all up, and that's your base. So you divided that the total cost of what you paid divided by what's left, and you're at 58%. So what that means is your assets, anything less than 50% is low risk. So you're in a moderate risk right now. What that means is that your assets have less life in them. They're on what's the word I'm like? They're on the second half of their life, not the first half of their life. So you will have some capital replacements required sooner in the future rather than later in the future. And then the final one is your operating surplus ratio. This is your surplus divided by revenues, excluding grants. So I strip out all the grants and I say, what's your surplus divided by your own revenues? A deficit of -1% is actually acceptable in this case. You've been in a positive surplus for the past 2 years. And then that is my presentation on your financials. Any questions on this one?
I'm sure Jason does.
Not on this. I will on their next, I believe, yeah.
Okay.
So what I kind of did here was take you through your financial statements. Now we're going to actually go to the financials. Nikki, should we go to, I believe it's page 22. This is the municipal debt. You can scroll to the bottom here. This is the number that I want you to look at. So a little bit of history on this. It's not something I take lightly. The handbook, I'm going to get a little bit technical here, but the public sector accounting standards, they tell us that when you guarantee a loan for someone, for another entity, you have to disclose it in the statement. So you have two situations. You have guaranteed a loan for Bonfield community housing. You're not making any pay. You're just guaranteed in the event that they default, then you'll have to take over. So we have a note for that. We had a note for Castle Home as well, saying that, you know what, I've guaranteed their loan, X percentage, that was a note. This year, it became inevitable, and our interpretation of it always was, you're not paying their loan back. You're paying a levy. It's part of the normal operation. Now this year, it's been pretty clear that they intend to, you are going to be paying that loan. You're effectively a flow through. They took out the loan and they're just flowing the payments back to each individual municipality. And in that case, when a direct link can be made, if I can make a link between a payment that I'm making at Castle Home and their debt repayment, I am forced to put it in your financial statements. The audit standards tell me yes.
Sorry, I didn't mean to catch up.
Oh, no, absolutely.
So, but tell me the difference between that and an operating cost, because an operating cost is human and it's a hard cost to be able to provide that service and that bed to that individual at Castle Home versus, and which we get levied for, versus the capital asset, which is now affecting our annual repayment limit.
So I've seen situations where a municipality has guaranteed a loan for a long-term care facility to do some reconstruction. It was never presented in the municipality's financial statements because it's a levy. Bonfield, I'm levying you, and that levy could be operating, it could be nursing care, it could be dietary, it could be anything, right? Well, in this case, they gave you a levy and they called it construction. They tied the interest that they're paying on that loan to the amount that you're paying them. And because they made that direct link, now the accounting standards force us to.
Was that known to us when this was happening? Because now this is really going to affect when we need to buy vehicles.
I was involved, myself and another accounting firm. There's 3 accounting firms involved. I'll say there's 3 accounting firms involved. Myself and another accounting firm were consulted by our clients, and the way it was portrayed to us and presented to us was yeah, no problem. It's a note, footnote in your statements, no impact. And there was, I don't know how much a change in governance, changing governments in the majority municipality, North Bay being the majority on that board. There was a change in audit firms, and what originally was presented to us is no longer what they're doing today. So that changed our opinion. Like, so 4 years ago, or when we were, had we known this is what it was gonna look like, my opinion might have been different.
But how do they just, sorry,
Yeah.
I mean, how do they just change that? And like, it affects us so much.
So we did know when we were, like, the letter came and the levy, the invoice came, and it was just an invoice that you were paying this interest charge for the construction lien. And that's all it was. It wasn't part of a levy. It wasn't part of anything. So they spelled out what it is. But for the most part, all of us municipalities missed that this now impacts ours. So we're all finding out at our audit time that paying that interest direct
This changed.
is what changed the dynamics of the agreement that we made.
So,
And it was, oh, sorry.
no, please, yeah.
It was our belief that that would not affect our.
Absolutely. We all
and now
understood
it has.
that it would not impact us.
So, and I'm not sure, this isn't an avoidance of transparency by any means. We have planned in this municipality, as I believe others have, for a number of years now, getting ready for this capital repayment of Castle Home. So it has been a topic of conversation within this municipality for many, many years. The challenge that I have, and I'm not sure if it's an accounting principle or a provincial policy, I'm tending to lean that it's a provincial policy. I'm fine the fact that it's a capital, it can show on the capital here. The challenge that we as a municipality have, it's not the actual payment. We're fine to actually make the payment. It's the paper change that happens that says all of a sudden now our annual repayment limit, we are over it, which now has handcuffed the ability for our municipality to be able to borrow money for day-to-day things. So if we have a fire truck that goes out and we need to replace a fire truck, because of this change, we now are handcuffed and can't, according to the powers that be, our annual repayment limit.
Ministry of Municipal Affairs and Health.
Right.
I think that we were all blindsided. I think you could say a lot of us were blindsided, and it definitely does affect you. I'm of the opinion, call it a levy and do what you want with your money.
Correct.
Like, levy me,
Yeah.
and do what you want. How you spend that money is that's not my purview anymore.
Can
The
we not,
minute they tied your levy to a loan repayment, the accounting principles change.
can we not go to Vic Fideli on this and, you know,
Well, I believe that we're gonna have to do that as a collective, as all of the supporting municipalities for Castleton. I think we will have to go to the province
Because-
and have further discussions. So I know this impacted 2 other municipalities in their 2024 financial statements, and now it's impacting the remaining supporting municipalities in their 2025.
because last night in corporate services, we just talked about how the fire truck's 44 years old and the other one is
Yeah.
38 years old and Public Works needs this and that. Like,
Yeah.
how do we,
So I presented council, and I think it's on your desk, and I don't know if you've had enough time to read it, but just about that impact, if
Yeah,
this is a
absolutely.
good time to jump in.
Yeah,
Yeah, so a quick reminder, like the province did mandate that Castle Home had to become a Class A bed in 2007 facility. And then in 2022, it took that many years to work through. So in 2022, we did the financing with Infrastructure Ontario. All the supporting municipalities became the guarantors for the then $57 million project. For the rebuild, because that was the only way that they could actually upgrade, as the ministry told them they had to.
and what did $57 million turn into?
Oh, so I don't have final numbers on the
120 right
construction cost, but
120 right now, as of February 2025.
yeah.
No.
It's a,
Over double. Wow.
yes. So bond filled share is 3.07% of the total required loan. So we entered in, I believe when we entered in 2022, that our maximum amount identified was $1.7 million. It was noted that the fine print of the actual amount payable by the guarantors was not that, it was actually based on what it will be when it's a final construction. I want to note that Castle Home has not increased the levy since we've entered into this agreement. So the operating levy, that has stayed consistent. And up until 2025, they depleted their reserves to pay for the interest. So in 2025, they no longer had the reserve, and that's why they came out to the municipalities. And that's why there's this change. Essentially, I think that the amount that Bonneville is now responsible for is $3.8 million. And again, these are not final numbers, but our 3% turned into 3.8 million. So that's a difference of the $2 million that we will have to pay. The audit revealed, as we were talking about, so this does impact our annual debt repayment limit. So our current annual debt without Castle Home, we were paying an annual of $249,000, almost $250,000. Castle Home debt, and as Councillor Corbett explained, that we've been putting away so much every year to build up because we were expecting $120,000 repayment every year. I believe that number is now closer to $170,000 that we have to do per year. So we still have to we still have to continue building into that. And at the same time paying the interest, but the interest can come from that reserve that we're building from Castle Home, as we did in 25. And they have already levied for 26. We've paid in 26 for that interest as well. So that is coming in. So prior to this, the annual debt repayment limit is at $907,000. So we're only paying $250,000 of that. But the best practice is to not be above $40,000. Or sorry, 40% of your debt. I mean, it's just financially, because that is based on your revenue. So you don't want 40 cents of every dollar going to debt. You don't want to have that higher number. So our existing, with what we were paying, we were at 28% of the annual repayment limit. With Castle Home, we're now at 46%. Drastically in changes. We've essentially doubled we were at $2 million in debt with Castle Home, and the Castle Home debt is at the $2 million. Again, not final numbers. So that's what we kind of speak about on here. Castle Home is a 30-year amortization. So for 25 years, the province is kicking in a little bit of money that's offsetting. So in the up until then, we're paying, again, anywhere between $160,000 to $172,000 a year until the year 2052. And then in 2053 to 2057, we're closer to $211,000 because that's when the province stopped paying in some of that Castle Home money. Our 10-year capital plan, and I spelled it out in your report for fleet, equipment, purchase parts, everything. Our asset management plan says that even the deficits that we have, because we know that we are behind. We talked about this at corporate services meeting last night. As you said, the fire truck is 44 years old. Our plow trucks our half tons are twice the useful life that we had actually estimated them to be. So there's a lot that we have to catch up on still, even though we've been doing great for 3 years. There's still a lot that we have to do that catch up on. Our total is, in the next 10 years, we need to spend $15.6 million. That's $1.5 million a year is what we should be. We're actually averaging about $700,000 in what we need to for the asset management plan. And of course, our financing strategy for that asset management plan included debt servicing. So we were going to get debt. It was going to be an accumulation of finding user fees and ways to increase the user fee. So it's just fees there or services that just a handful of people or certain people need, and they would go into user fees. It would generate a little bit more revenue to help offset some of this. And of course, there's always taxes, but we don't want to increase the taxes more than what we need to based on some of these budgets. And then our third option, of course, is through the debt. So this is going to impact that financing strategy. I have a meeting already scheduled with the consultant to see what that's going to look like. So we can work on how, we were still just building to get to our $1.5 million a year, and that is going to take a long time. So now we have to recalculate everything in. As we talked about earlier, our debt servicing cost, it's a percentage of that total revenue, and we were at 5.2, which is a moderate rating. I expect that we will still be in the moderate based on with Castle Home, but it's going to be much higher rating in that moderate. So it's going to affect how attractive we might look when we go to look for interest rates or new debt.
Sorry, if I could.
Yeah, there's something.
Two things. One, I'll just say, as council knows, I have a conflict on the Castleholm file itself. As my wife works there, so I'll reserve comment on the actual whether Castleholm is a good idea. But I don't feel as though I have a conflict when talking about counting principles and or how it affects our debt servicing limit. So if we add in that full capital cost of now against our annual repayment limit, which is set by the province, correct? What does that do? Does that cap us? Does it push us over?
We're not over our annual repayment limit. Best practice, and I can certainly let Jeff speak to it too, but best practice is you don't want to be high on that. So we're, with Castleholm, we're at 46% of our annual repayment. So I think our repayment limit is $907,000 a year. So that's all our debt, so smash it all together. How much do we pay every month? Add it all up, and then this is what we have. So we can go up to $900,000. We are currently at 250. Add in Castleholm, we're at 419. So we're almost half of that. So it's how much are you comfortable putting in from your revenue? Because what you're taking from your revenue to spend on debt, you can't put into the capital.
Okay, but I'll just come back to, I thought what you said earlier was great. Budgets are budgets on paper and you have to provide context. So the context, in my opinion, on this is, yes, you have to show it on the books if that's what your accounting principles are saying you need to do. Fair enough. However, if this municipality has been preparing for it, are we really in any worse of an actual, in context, position? I mean, short of the cost has gone up, I can appreciate that. But this isn't new news to us. It's just whether or not, from an auditing perspective, I would look at our auditor and say, are we actually being financially irresponsible if we continue on our path of saying we are going to manage some more debt to be able to actually reinvest in fleet and all of that, knowing that, yes, it's 46%, but it's the same 46% that we would have had before. It's just now showing under the same.
Yes and no. Yes, you are worse off because what you planned what you expected your capital levy to be, we now know based on somewhat outdated information, your capital levy went up to 160, 180. Like what I struggle with here, and I want to say we're going to use the word conservative, but that's an accounting term. I tried to make this number as small as I could make it be. Like within the parameters of the accounting, I will say that we've exhausted, and I believe Nikki has done the same thing. I've talked to all my municipal about, can you get me current information? There were 4 different tabs with vastly different numbers. This is the lowest number.
Sure.
If I put this number higher, it affects your repayment limit. So yes, it's worse because what you expected to pay initially and what you were building into your budget has come in higher. We don't know what the current costs are.
And if I can add in,
Yeah.
so when we were budgeting for that $170 or $150 or $120,000, right? So we initially said $120,000. That was an expense.
Yeah.
So it did not affect our annual repayment. It didn't affect our debt at all.
Right.
So it was just an expense.
Yeah.
But now because it has to be recorded as debt, it
Correct.
affects the annual repayment.
So hang on, let me finish my thought here.
So Councilor Corbett, you are worse off because your levy is higher than you expected.
Yes, 2% of it's a 2% tax increase is
Now,
what we're looking at.
What the problem is not so much that your debt repayment is higher, because you've already, for argument's sake, take accounting out of the equation.
Sure.
You've already budgeted in your plan to absorb that capital levy.
Minus 2% because the cost went
The
up.
problem is that when a lender looks at you, they may deny it because they say you have too much debt. Why do you have too much debt? Because they're not taking into account that you've already budgeted to pay Castleholm levy. They're saying, well, because they look at this and they say this is too high, which is, I think, somewhat of a lack of understanding of accounting principles on the lender, like partially in the lender's part. You've built that levy payment into it. When they look at this, they look purely at what's my future debt. Not how I'm gonna fund it, how I'm gonna, unfortunately.
Yeah, I mean, I guess, listen, I'm not the expert in going to lenders and finding this money, but
And
I can't imagine that if we would sit in front of a lender present that as a case and say, as a municipality who has the ability to raise the revenue that is required responsibly, as we would all look to do, but ultimately we have the ability. So we are very low risk from that perspective, as far as, you know, we're not waiting for somebody we don't have to sell a widget that didn't sell. We are providing a service and collecting a tax to be able to do that. So I appreciate that. I can't imagine that we can't build this context, because again, I don't think our position has materially changed, short of that 2%. Because we were going to be putting out all of this money under this line. We've now had to move it into this line, so it looks very big, but it's not really materially changed the position of our municipality. It shows as a debt now, as opposed to a levy.
Yeah.
Call it what you want. We were paying all of that regardless.
And can we actually, Nikki, maybe flip us to the income statement on page 8. So I can't quite, like, I'm not a banker, I
I think I'm about to say about a financial expert. I'm like,
I'm not a banker, I'm not a finance person, I'm not a banker, so I can't talk to the lender.
No.
They're looking at you, I can talk from an accounting. Now when I look at this, this is your annual surplus. You're from operation, when I look at core operations, you're in a surplus position.
Right.
I put the Castle Home, I wanted to take what you paid to Castle Home for the interest for the capital levy is included in your social and family services line. I wanted to put that debt, because it's an accounting really principle, I've separated it.
Appreciate that.
Hopefully a knowledgeable lender can look at this, understand, like reading the accounting notes, again, you have to take and realize the true financial picture. Like I said, it's not all about the numbers, like there's a context behind these numbers. I would hope that the financial institution, a banker, has some understanding of the accounting principles in the budget process. You are different than a business.
So even though we've brought this into the capital side of our budget, it was going to be in our operational side of our budget regardless. So a smart lender would look and look at the operational side of our pressures as well as our capital side. So now they're going to find it all in one document instead of having to look at two, but the numbers, short of the 2% tax increase that we would have to look at, it hasn't materially changed. That's just I'm obviously either not grasping it appropriately, or I maybe should be more concerned, but I'm like, I don't know that we've materially changed the position of the municipality.
But it's one piece of paper that has changed everything for us.
Oh,
But if we need money, like it doesn't affect us this year, but if things don't change for next year, it will,
So
right?
What happens if we go and buy $2 million worth of trucks right now before this comes in?
what?
It's in.
Yeah, but that's what I'm saying. Like,
It's a drop.
Yeah, it's a draft. Yeah. It says draft. But yes.
so fair enough. I would rather it not show up the way that you're having to put it in. If you're telling us your accounting principles,
And
that
I'd
you put
rather
it in
not.
this way, then it is what it is. I think we actually have to work with our lenders to make sure. I don't want to get to the position where our ratepayers are feeling alarmed that we can't afford a fire truck if we need a fire truck. That being said, if we have lobbying work to do as a group with the province to be able to either reflect this differently or the province say, yeah, it doesn't have to affect your annual repayment limit. You can exclude that from a provincial standpoint so that we can actually reflect that, in fact, our annual repayment limit, we are back down to reasonable, which is where I would say we were previously. Then I think that's the work we need to do.
We definitely need to do lobbying work.
I couldn't agree more.
I don't think that because we all thought that this was never going to affect our annual repayment limit.
Right.
And we really don't want it to. We're
Absolutely.
not as attractive. We are far more attractive at 28%
Sure.
than we are at 46%. Like, we can manage that 28 cents on the dollar going to debt. Okay, now we're at 46. And I understand, like, we have a lot of capital work that needs to be done. And debt isn't the only way that we are going to manage to get all of that done. This may postpone something while we're trying to work on it. We know that another municipality's already been affected when they went for lending for this. So I think we just need to be cautious, and we need to make sure that we're planning that properly. But that's what we're here tonight to
Yeah.
discuss, right? So our asset management plan, we're going back to the, the financing strategy to determine how we can do, and those will be reports back, but this is definitely just information you need to be aware of.
So how does a smart lender not add the two numbers up and get to 46% as opposed to we've now presented at
Because it's
46%?
not debt, so it doesn't show up as debt, so it shows up as just an expense, much like, it's a really high lease, but let's say we were leasing something for $130,000, just a lease, so it just shows as an expense. So it doesn't affect your balance sheet. Now the debt affects your balance sheet.
Yeah, I would just say a smart lender would have seen the news that we have to pay how much money in Castle. They know
And
that
we're,
it's coming.
we're
Yeah.
prepared to pay for it.
Yeah, like that's
completely
never been an
agree.
issue. Yeah.
The payment's not the issue, that it affects our annual repayment is
Right.
the issue.
Yeah.
So who would we be lobbying the province to make a difference for us?
Yeah.
And if there are a number of municipalities, maybe we should pass a resolution to seek help for this because,
To me, I agree. I think the smartest thing we do is get the municipalities together and start going after, the government to change this. Like, it needs to be changed.
Come up with options.
Yes, because it's gonna, hurt us.
Okay, here's the piece. Sorry.
Lenders, like, to your point, I don't think they will even have that option, right? Like, they have their own systems in place that they just take the balances and put it in the computers, and it gives you what they can do, right? Like they're not human beings at that point.
Yeah, I mean, definitely banks have got to that, but I think there are some, you get high enough up in a bank and you're talking about a municipality, which is actually treated differently than somebody who's selling a widget. I think that you can actually find your way. Now, are we attractive from a bank, an appropriate rate for a loan? I think that obviously we don't want to pay. The more risky that we look, the higher the interest rate is, and that's never an ideal situation. So, yeah, I just want to make sure. I 100% think we need to lobby the province. But even if they allowed, there's the difference between we're going to have these audited financial statements that the bank's going to look at, and regardless if they change what our annual repayment limit is, we still have to go with our audited financial statements. The bank doesn't ask what our ARL is, they ask what our audited financial statements look like. So I don't know that it actually truly supports us when we're sitting in front of a banker.
They do look at it.
They do?
Banks do look at the ARL, yeah,
As well as,
as well as it. But like, this is as clear as we've put a footnote. I've put it on a separate, we've tried to make, point the users to the note.
yeah, and
Don't
I
just look at the
appreciate what
balance
you've
sheet.
done, for sure.
Go look at the note, read it, I don't wanna try and understand the notes. Call management if you don't understand. Hey, you want my auditor come in and explain it?
Right.
The note, you can't just take one statement. You have to read the whole statement
That's it.
together. And with it, it tells me a story. Okay, I'm guaranteeing a loan. I'm not actually paying a loan. There's a difference between paying a loan and guaranteeing a loan.
Right.
Well, the accounting standards say I have to put it in there. So we've tried to make it as, and I put a little I, we put a big paragraph. So if a financial institution is looking at this, hopefully they ask the questions. I can't speak to why that municipality was denied. I'm assuming they might have been, maybe they were over their annual repayment limit.
Yeah.
It could be
Could be any.
a lot of different factors, right? What we do know, is on paper, when they take a look at your ARL, we're getting up there. That's.
And I appreciate that, for sure. I think what I want to make sure is the whole point of the conversation I'm trying to have is, yes, we've got work to do to lobby and we want to do that, but this can't paralyze the work we've done. We have been doing great work, making smart investments as a municipality. This can't paralyze that, because really our position hasn't materially changed from all the information we already knew about the pressures we're getting, all of that. Yes, it's costing a bit more for Castle, but we can't let this paralyze us and not do more good work in the future, right? So that's the piece where I'm like, let's not put the fear of into everybody and just be like, yeah, this is it's a hurdle, but it's not overcomable.
Well,
That's not a word. We can't overcome it. Or overcomable. Yeah.
And I just, if I could bring back a little bit of,
Same.
that would be on page 20, which is 26. And just to put some of this in the context as well, what does that mean? When I said you had reserve set aside, and and it looks like 2.8 million is a lot. Let's talk about that. You said it was 2%. We were, $20,000.
We'd be short, yeah.
So that's either you absorb it through a combination of tax increases or pulling out a reserve, right? You have your capital, your asset management plan. You said you were in a shortfall, that you're spending about 700, you need to spend about 1.5. I think we all would sit around here and say, I can't just go and find $700,000 a year. Maybe there's some money that comes out of reserve. Maybe there's a combination of reserves and borrowing plus taxes. But I guess my message is here, yes, $2.8 million looks like a lot, but you have to look at the whole picture. What are your operating needs? What is your future capital needs going to be? So it's not that you're sitting on an excessive amount of funds. You have a plan. You have a 10-year asset management plan, and you know that you have certain equipment that might need to be replaced sooner in those 10 years than later in the 10 years. So
We'd need $5 million today to catch up to where we needed to be last year on capital.
right, so that's not,
Right, CAO?
it's healthy.
So,
It allows you to absorb some bumps and shocks along the road, but it's not excessive.
okay, I assume you saved good news for the end.
Well, the good news is the good news is you're able to, put some additional money aside into your working capital to absorb it. I think it's an important conversation, and I do feel for you. Like, as a ratepayer and sitting in council, sometimes my job isn't fun when I tell you, well, the accounting, I gotta be the bad cop and say, this is what the accounting standards say we have to do.
Yeah.
So that's not the fun, that's the not fun part of my
Yeah.
job.
I get this as you, and I actually appreciate how you've presented this, because I think it actually allows us to tell that story easier to lenders or anybody else, and even the province when we're going to make presentations, so.
So I hope that tonight, what I'm leaving you with is maybe somewhat of an ability to be able to explain that to someone, if they ask you.
Yeah.
Why did they do that?
Yeah, very
I
good.
hope I've
Yeah, you did a good
been
job.
able to
Yeah, great job.
explain that.
Well, when I heard that last year, and when a municipality was trying to get a loan, oh, that's not applicable to us. Oh, good. And then
And then
I talked to Nikki, and here we are, but it's something, because it affects all the municipalities. I believe that if we stick together with it, and that we knew that something was going to come out of the Castle Home, the capital part of it and the operating part of it, but I believe that we should lobby as hard as we can, and I think that we should go out to the other municipalities that are experiencing the same thing. The rest of our budget is good, and we have to be happy about that, but Castle Home has been the doom and gloom for the last this term of council. We knew that something was going to come out of it, but I think if we lobby hard enough, maybe we can make that change, that the banks will accept that as operating expenses, because on top of all of that, we still have operating expenses. That's separate from the capital, right? So, any questions or?
No, I think the biggest thing, I mean, like you said, it's a $50,000 difference.
Yeah.
From what we were, really, it's a $50,000.
Which is less than 2%.
And you have put some away, right? You do have, and you have been putting money aside,
Yeah.
knowing that it was coming up.
It's just that the 2 million got dumped on the wrong side of the accounting.
Yes.
That's it.
That's it.
Thank you very much for
Yeah, very
good.
making the
Thank you, yeah.
presentation. And I just want to say as well, where things were set out in here for us to understand it better, and going over each of the terms that were in our budget. And I certainly welcome that. I think you presented it to us very well. And I thank you very much for that.
You're welcome. Thank you. My goal is to make it as understandable, make accounting as understandable as I can.
Goal achieved.
Well, thank you. I know I took up a bit of your time.
That was great.
Okay, thank you.
And as you, anytime you have questions, you feel I'm going to reach out. Thank you, folks.
Your worship, there is a motion There is a motion to accept the financials.
Okay, just, I gotta get back in here.
Yeah, absolutely. Okay. Yeah, we
Here
need,
we are.
do the signature and then the rest.
Yeah.
Have a good one.
Good night.
Thanks.
Night.
Okay, I'm over in a seconder for the motion.
Moved by Counselor Corbett, seconded by Counselor McInnes. Be it resolved that the Council of the Township of Bonfield hereby acknowledges receipt and approves the 2025 consolidated financial statements for the Township of Bonfield as prepared by the firm Baker Tilly SNP LLP, and that Council directs the CAO to provide public notice that a copy of the 2025 consolidated financial statements is available at the municipal office and on the township's website in accordance with section 295 of the Municipal Act 2001.
All in favor? Carried. So Jason, you went through this and
Yeah, we
I'm
did
going
that.
here.
Yep, yep, that's exactly right.
Right here. I want to apologize for being late, and I thank Jason for taking over and for everyone having patience with me. I didn't want to miss the budget.
I let everybody know you just had a previous
And
meeting and you're running
I
late.
didn't get a ticket.
Oh, that's good news.
So now we have the Steel Rail lottery licensing letter. And you have a report, right? Andre is gonna do that.
After receiving the letter from the Steel Rails Committee, we had some questions, and what the CAO and I did was actually reach out to the AGCO to make sure that whatever was in my report was accurate, as not to deter the Steel Rail from applying for a lottery license, but making sure that up until this point, they still did not meet the requirements of obtaining a lottery license. One of the things that was pointed out to us is even though they are or have been in existence for a year, it's not the only requirement of any organization or committee or group. They actually have to do sorry, I'm losing the word there.
They have to further the education, they have to do
Yes.
an event.
They have to, because they're stating that they're under the education portion. So up until this day, they have still not done any education of the steel rail, of what they're doing, advancing the purpose and things like that. So until that is done, and it doesn't mean that they have to do this on a weekly basis or anything, but they have to show that they've done some education throughout at least the last couple of months, right? And at this point, there has not been any. There's also a section where they could use any of the proceeds for what they call the building fund. But in order to qualify for the building fund, they have to own the property, which they will not. It would only be leased, so they don't qualify to put the funds to that. So whatever funds that they would get from a lottery license would be strictly for education purposes. So doing education sessions, like it has to do with education. So one of the suggestions would be Facebook. They could do promotions or have a Facebook and did you know the history of Bonfield, like educate this, not just the township, but everyone on the history of Bonfield, how the rail came, different things like that.
I think
So,
what they explained, if I can just
Yep,
give an
yes.
example of that, is they can have the Facebook page, and if they had expenses to further their charitable programming, which they said is education, so it's the Steel Rails for Education. So they have to further that programming within the year, and it's not a one and done. This has to be ongoing for as long as they want to remain eligible for lottery. So having the Facebook page, it's, do they have expenses? And so is somebody doing video recording? And so they're paying somebody to video them to say, you know, this artifact came from here and this is, so they're kind of giving more of that really drilled down detail, more of the education, not just promotion. I think they've done a lot of great promotion. We did talk to the AGCO about the difference between promotion and education. So the education piece is the active programming. So there hasn't been any active programming. They didn't submit anything. We're not aware of anything. So he wanted to make sure that that was one of those pieces that they have to do before they're eligible.
no, that was the word I was looking for, was programming.
Yeah.
So, we don't want to, we're not saying no to the steel rails, but what we are saying is you need to come back with programming on a regular basis with expenses, and then at that point, we will relook at all of the requirements. And if it's been proven to us that they've continued with their programming, they would be eligible for a lottery license.
Do you have a comment?
I do. Thank you. So I think as it states in your report, and I can say publicly and council attest that council is supportive of this project. So obviously, you know, this will perhaps not be great news for the Steel Rails Committee, but I think two things would be helpful. One, ensuring that they know the criteria that is expected to meet, and working with them to make sure that they that it's transparent, that we're not going to say, you know, we'll leave it up to you, but and then if you come back with something, nope, sorry, you still didn't meet the criteria. I think if we can actually really help set that bar, and this is, quite frankly, lottery applications don't typically come to council, do they? That is, yeah. So really, it's in front of us for information at this point, not even, we're not an authoritative body on this. And, you know, obviously the AGCO is the guiding authority on this. So, yeah, I think hopefully Steel Rails will also connect with AGCO to help ensure, from an education standpoint, understanding exactly what they need to do so that they can be successful approaching our lottery officer and being successful getting a license. Because I'm sure it's not great news, unfortunately. You know, again, it's not us sitting at this table that are the deciding factors on this. So,
If I may, I believe that they do have a building that they can lease and make rooms of different, if it's steel rail, if it's artifacts, and that sort of thing. I think they have a pretty good plan, just in talking to them, and I haven't seen anything on paper. I look at who would determine education, and education with respect to days ago, what our community was like and what's there. They could have a room, like I said, of artifacts. They could have possibly have, there's a number of natives in our community. They could ask the natives to come in, and I think that's part of their plan, to try and bring in a room. The same thing with kind of like what Madajuan has down there, and their building with maybe canoes and paintings and that sort of thing. I think that it's in the plan to maybe involve the natives in the community. So maybe it's not enough information out there. Maybe that could be considered education, because I believe that there's not too many, and even the new people don't have the knowledge of what could be in that building as a museum for our community. So maybe it's a matter of the Steel Rail Committee sitting down and putting together their plan better. What would be considered education. And I think there's a lot of opportunity for education if you can bring together. I know there are people out there saying, I want to bring this forward, but in the past, that started and then it failed. So people are not willing to part with their treasures if they're not sure that there's something that's going to happen. But and their dreams seem very big, but they always start with the little dreams. So it's possible maybe to meet meet with them, talk about what would be considered education, and possibly it could move forward. We're sitting here talking tonight. We can't go anywhere if we don't have any money. And that seems to be the same issue with, they're willing to work for it, they're willing to do that. So, and I'm not being critical. I'm just saying that maybe there's some way that we could make it happen. They might have to go back to the province like we do. So that's my thoughts on it. And I could see a building, especially when you have all the different parts of it, you know, what could be in a museum and what you could go in there, possibly something outside for the children as well. But there's education there, but how do we bring it out and how do we show it? That's my thoughts.
Can I just follow up? So I might have missed an update or a meeting, but the last I remember, when they presented to council had agreed in principle to reserving a piece of land for potentially a long-term lease or what have you. And then you just mentioned that they have potentially have a building. So are they not looking to the municipality for property anymore? And if so, that's good to know because we've been holding off potential planning on property there. But
yeah, I think in the end, I don't think anything came here. I'm not sure.
yeah,
It all went back and forth, and I think they do have a building. The thing of it is, there was no building. There was possibly a piece of land.
right.
And before you ever get anything off the ground, there'd have to
Absolutely.
be a survey, all legal
100%.
fees,
Yeah.
all of that. So I think that they look for something else.
Totally fair.
Yeah, and working with it. Again, I'm just chatting from hearing the conversations here and there. So I think the real thing would be for the committee to maybe meet with our clerk and our CAO. And maybe there's somewhere that it could be considered education, all of what they're looking forward to. Will it happen? It won't happen if you don't raise funds and move forward.
I just want to know if what we had agreed to in principle, which was a potential longer-term lease on a piece of property, if they're no longer interested in that, that's fair enough. Like you make all good points. Like there's lots of hurdles that come with that, but if that's not what they're interested in anymore, it would be really nice to be able to actually know that we can plan something different on that piece of property if another opportunity comes up. So
I can speak to council had, because we all support this project, council had put our planning administrator on one of the steering committees to work with the committee. So I'll follow up with him. I know he hasn't attended a meeting. I don't think he's been invited to a meeting in a while. So I'll check. Maybe they haven't been meeting and I'll see what he knows.
I don't know if they have
Yeah.
meetings. I don't know that.
Councillor Clark.
Yes?
Hi. So we actually, we did receive a letter from Steel Rails letting us know that they no longer needed the property. It
Great.
actually came to council.
I don't recall it, so I just
Yeah, it did come to council, but I just wanted to say that I agree with Mayor Paquette. It's that you apply for a job and they say you can't have the job because you have no experience. Well, you have no experience because you can't get a job. And I think this is kind of the same, the same thing. I thought that the deputy clerk did an amazing job in the report, and I think it really does spell out a lot of it goes into detail as to how you can actually identify education, what the differences are, and what the province is looking for. So I thought that was a really good report. And I think that it was great that you went even further. You probably looked at the policy and the criteria, but you actually went further and contacted them to get more information. So I thought that's really great. So, I mean, I think we're going to get there. Just, it's going to take a little bit of finessing. Yes. So
I think we're all just trying to figure out how to make it work for them, right? Like that's
yeah. But again, this isn't it's not us saying no. It's like we gotta make sure because this is sort of beyond our purview. So it's gotta be well within the confines of what the province is asking for us. So we're just the issuer.
All right, I think that maybe there's collaboration needed, and I just think of what it could be, and maybe over a period of time, but it's always the money issue, and how do we get money? So it's maybe there's something that they could bring more information forward as to how it would meet the criteria for education. And maybe that would make a big difference, because I see it as education for our community. I do, especially the train, the railway, and what all they're putting in, or what they would hope to put in, because it would have to be the community, because people would bring in, if they had a secure place to bring their treasures in, people would bring it. I'm sure you'd see something happen. So it's maybe good to talk about it.
Sounds to me like they just need to do more public things as opposed to, conversations that maybe they've had, but they need to actually do public events, right?
Okay,
There's a
thank you,
motion.
Andre. Next,
There is a motion to go with the report.
pardon?
There is a motion to go with the
I have
report.
it here. Oh, yeah, we got out of order, my fault. A motion, please, for the steel rail. Mover and a seconder.
Moved by Councillor Corbett, seconded by Councillor Clark, that council receive the report regarding the Steel Rail Group lottery license request. And further, that council advise the Steel Rail Group that the organization does not currently meet the eligibility requirements for a municipal lottery license under the AGCO Lottery Licensing Policy Manual. And further, that council express its support for the group's heritage preservation efforts, while noting that the township has no authority to waive or alter provincial eligibility requirements.
All in
Well,
favor?
wait, I have a question. I'm not clear why we're, sorry?
Sorry, I'm just letting everyone know that Donna also raised her hand.
Oh,
Sorry.
Go ahead,
Mr.
Jim.
Clark.
thank you. I'm not clear why we're actually passing a resolution on this. So typically these don't come to council.
Right.
So I don't know why council would be passing a resolution regardless on this. Like, are we setting ourselves up for future challenges?
So technically, it is the council who who has the authority. You delegate that down to staff. It's been delegated from the municipal council by bylaw for many, many years.
Right.
That comes down. So this resolution is just acknowledging that you received the receipt, that the request that you've received the report, and then it's closing that loop to say that we'll go and meet with you.
But we don't do this with any other lottery license.
No other lottery licenses have ever come to council.
Well,
That's our point.
Yeah, that's right, exactly.
But
So why are we doing it?
Sorry, the letter, the request wanted council
Yes.
to basically authorize or overturn our decision. So the motion states that council can't waive, you don't have the authority to waive or alter the provincial eligibility requirements.
So can I ask you, that's for 50/50 tickets, probably, something like that? Or
50/50
tickets to sell on
Nevadas,
I'm just saying,
anything
tickets to
lottery.
sell on a car? any lottery, there's any type of lottery, it's, unless it's pertaining to those certain items, then
If it's under 50,000, I believe, the municipality can issue the license. Over 50,000, they have to go provincially.
through the province,
Yes.
yeah. Okay. So, all in favor?
I think Councillor Clark, did she not, do you have a question?
No.
Oh.
Oh, I'm good. But I agree, I guess, is this kind of us being that appeals process? What, is that a thing, or is that what this is?
The AGCO would be the appeal process, I believe, not council.
Okay, so then, yeah, I guess I would agree that no resolution would be needed. That it's for information, right? The report?
Yeah, I think if we
The-
defeat it, then it's just more confusing.
But the report was for information, but the letter requested that council approve their application to overturn staff.
So
Not
I
the-
guess
So if you don't pass the resolution, there's no closing of the loop, right?
So-
So you're, if you don't, then they're just gonna go, well, what did you do? What was the decision?
passing the resolution, we're backing staff.
Yeah, and so every time we turn down a lottery license, are we gonna get one of these?
It's up to the organization. We work with everyone, and typically we don't turn down applications if we can't. That's why we reached out to the AGCO on this letter, was because did we miss something? Is there something
Right.
that we can do to help this organization get the lottery funds? So we've done everything, we've exhausted our options for this and anything that staff can do. So, and that's why the Steel Rail Group has asked council to go above, to go above.
Fair enough. My sensitivity to it is, we went through great pains to try and ensure that it's explained that we are not the authoritative body, given that they are not meeting provincial requirements. Now it feels as though we are an authoritative body, that we uphold the staff decision that they are following provincial legislation. I'm like, that feels, listen, I just don't want to set a precedent that people are, anywho, it's
Go over
probably a
staff.
2% issue, but I'm just. That's
So
my
I
concern.
just want to ask a question. So if the municipality turned it down, and I'm only asking this because I have no idea in my head that it's possible, but if the municipality turned it down and this resolution says, no, we're not dealing with that, then do they have an option to go to the province to apply for it?
Not to apply for it, but they can ask the AGCO to do a review of their
Sorry?
eligibility. So they can't apply to the province because it's still a municipal license,
Okay,
right? So they can go to the AGCO and ask someone there to do a file review. To say, and then that AGCO will look at and request all the information that we have, they look at everything that we've asked questions about, and then they will do a review on their eligibility. Which is why we called to see if there was something that we missed. If there was something, if there more information that we need, what would you do and how would this work? But they have that option to go and get a file review with the AGCO.
so do they need something like this to go to the province?
No, they don't.
No.
They can go right now.
Okay,
So by that rationale, wouldn't this letter have been better served going to the province? No?
They can, yeah. They can forward this letter. I mean, they have to reword, obviously, but
Listen,
that is their next step. If they feel like we've assessed it and.
at the end of the
assessed it
day,
wrong,
I'm inclined to support the motion only for the fact that I don't want to leave it defeated, and then that just brings more confusion. I was trying to understand the process as to why it's in front of us in the first place, but that's no harm, no foul, as long as people fully understand that even though we passed a motion on it, it doesn't make us the authoritative body to over provincial. So.
no, and that's what I wondered,
Yeah.
then if they could say, we
Right.
have not been accepted with the municipality, we feel that we have this or that, whatever. I'm,
Call for the
I
vote, call for
don't,
the vote again.
Yeah, I think
Just
we'll be
call for the vote
okay,
again.
yeah.
what are you doing?
Call for the vote again.
I bet you we'll be okay.
Okay,
Yeah.
who was the mover and seconder?
Counselor Corbett and, seconded by Counselor Clark.
Okay,
So,
all in
and sorry,
favor?
just to be clear,
Oh, call the vote.
yeah, so the motion just says that we accept the report and that we have no jurisdiction.
Would you like me to read it again?
No, I think I got it. Thank you. Okay,
Her hand's up, so.
my
Well, I
hand's up.
want to make sure her hand is up. 'cause
Yeah,
it
you gotta
was
be
a little
closer to your face.
bit-
Okay,
Okay,
There you go.
All,
okay, all in favor? Carried, there.
okay.
Next, we go to the tender for the 2026 stockpile closing May 25th, the results of the meeting. So, is that a report from Alex?
I can just touch on it quickly. So we had three quotes that were received. I know we spoke previously that we had just A gravel listed for stockpile. As council suggested that we'd switch to quarry A material, that to bring up our or upgrade our level of service within the township. That being said, there was three quotes received. The lowest quote was received by Canor for $111,652, and it was still within our budget. That quote was, or sorry, that tender was for 5,400 tons of material.
Okay. So there is a motion there to accept the tender. I gotta remember Donna, so.
I'm looking.
Wave your hands more, Donna.
I-
When you
I
put your
think-
hand up over here, we can't see it.
I think Counselor McGinnis, do you have a question? No?
no, I moved it.
Oh, okay.
Moved by Counselor McInnes, seconded by Counselor Corbett, that council receives the bid submissions for the quarry granular A stockpile quote as follows. Bidder, Evan Hughes Excavating, $146,142.90. De Gagne Aggregates, $127,836.90. Canor, $111,672. And further, that the tender be awarded to Canor, in the amount of $111,672,000.
All in favor? Carried. That's not what it said in my motion. Okay. So there, we have correspondence
We've gone through correspondence before.
before that.
Yes. So we're, item number 12, confirmatory bylaw.
Sorry, I did have a question for Mayor Paquette about the OPP board meeting minutes. I just was noticing that you ordered challenge coins.
Yes,
Yeah, so are those the challenge coins for the board or?
no, not for the board. It's for people in the municipalities. It can be given to anyone in the municipalities.
But challenge coins,
It's not for us.
but what does the challenge coin represent? Because like, so fire departments will have a challenge coin, or, departments can have a challenge coin. So like, who's issuing the challenge coin?
It would be the board.
It is the
Northwood Police Board. If somebody came and said to us, there's somebody in our municipality that has done this, they're done that, and we really feel that they would deserve a coin, and bring it to the board, I'm sure that's something that could be looked at. And that's the intention of it, it was brought to us by the OPP. It has been designed, the front has one design, and that's for all the different municipalities. And then on the back would be from your municipality.
Our logo, yeah.
It sets out sets out your municipality.
That's great. That's
Oh,
great idea.
yeah, I love challenge coins. I think we're, I think they're a great idea.
Well, do a good deed and you might earn one.
I know.
Yes, it was brought forward by
Yeah,
the
okay.
OPP, and I thought it was a good idea. They are, emblem is there now with the, what do you call it, loon, right?
Mhm.
And, the, I keep
Crest?
forgetting our trade show.
All right.
On Saturday, we were in the trade show and we gave out those little balls for the kids, those stress balls. And we gave out, there was these reflective bracelets that the children would wear riding on the bike or whatever. You see this, right? And they just go on your wrist like that. It was, the kids were there a lot at the table to get, if there was any free gifts. We also handed out pamphlets on everything. There was the one with registering if you have a security camera, to register your camera with the OPP. It doesn't mean that they're going to monitor your yard or anything like that, but say something happens in the area on your road or whatever, then if they would call you up and they'd say, well, you have a camera, a security camera in your driveway. Did you see anything? And that would be the purpose of registering your security camera. A lot of the other pamphlets were there. There was a lot of pamphlets. There was coloring books for the children as well. It was quite a trade show, a lot of people there. And at the end, the Horticultural Society reduced their plants half price. So I got quite a $20 worth, but I got lots and brought them home. I enjoyed that part of it, but there were a lot of people there. It seemed to be quite successful. And I heard the snakes were upstairs. But anyways, it was good. And you have our report from the OPP report there as well. And then our next, some of the members are going to the conference. I think it's the first week of June. And then we won't have another meeting until September. So.
Very good.
Okay. Do we have to accept that report? No way.
Nope.
And then
Confirmatory is where we're at.
go with that first?
Yeah.
We don't want to say anything about it?
We did that while we were trying to,
Good,
yeah,
thank you. Well, you
You're
were
welcome.
waiting.
yeah, while we were trying to waste some time, we moved down to
Okay.
correspondence.
Could I please have a mover and seconder for the confirmatory bylaw?
Moved by Councillor Corbett, seconded by Councillor McInnes, that the Council for the Township of Bonnfield hereby adopts bylaw 2026-27 to confirm the proceedings of council from May 12th, 2026 to May 26th, 2026, as presented and is considered read 3 times and passed this 26th day of May, 2026.
All in favor? Carried. Next, we have to go to closed session.
So I will
Yeah.
end the recording.
Pardon?
I will end the
Okay,
recording
end the
and then
recording.
Councillor,
Okay. Thank you very much. Thank you, Alex.